Okay, all right, Mangalam, thanks a lot for that. Indeed, that's the big mover today. Well, let's focus on the next corporate though, IEX. They posted a muted set of numbers in the second quarter. Revenue is seeing a 14% decline. Volumes as well did contract in the past quarter. Mr. Goel, the chairman and MD of the company, joins us now on the show. Hi, Mr. Goel, good to speak to you. Thanks so much for joining in. Well, Mr. Goel, the market has been worried about the weakness we're seeing in the DAM volumes. And you have maintained that there's an arbitrage in the DSM and DAM market. So DAM volumes, they are being diverted to DSM. But this arbitrage is there since a long time. Isn't it evident that you're losing market share to HPX?
No, in fact, if you look at our day-ahead market and RTM market volume combined together, I think we are maintaining the volume growth also in this segment. And though this year particularly the volumes have been flat, otherwise we are maintaining that volume growth. And as far as market share is concerned, market share when there was acute shortage of power at that time, yes, the market share had gone down to 90%, but in the month of October, the market share is back to almost about 94%, 95% now.
Okay, all right. So according to
I don't see any loss in the market share.
So according to you, sir, you're saying that you haven't lost market share, right?
No.
The fear is that HPX, you're losing some market share. Then my counter question to you is that HPX, well, suppose they start floating these conventional products. Currently, it's only DSM, right? Wouldn't that be a risk to you, or do you believe you can still hold on? Go ahead.
See, on exchange platform, the volume really happens in the day-ahead and RTM market. And these are the flagship products of the new exchange. And in these two products, we have almost about 100% market share. So I don't see any challenge in that. Other exchanges also have these products, but they don't have any significant volume in these products.
Okay. RTM is real-time market for those who are uninitiated.
Real-time market is where you can purchase power with just 1 hour notice.
Correct.
And this market is very useful now with the high renewable happening in the country.
Yeah.
And there is a lot of variability. So distribution companies are able to manage their supplies more efficiently.
Got it. Got it. Mr. Goel, there are some new regulations coming on just to take off on Nigel's point from the 1st of January, right? Which you've said should lead to this arbitrage going away.
Yeah. I mean, there is some arbitrage in the day-ahead market and the day-ahead contingency market, which is available at the moment. But from 1st of January, the new regulations should get implemented. And once that happens, even that arbitrage will be over. So the volume will further shift to the day-ahead market. And in fact, CRC is implementing the couple of new regulations from 1st of December itself. One of them is the deviation settlement mechanism. These regulations now, as of now, the deviations are priced as per the average price of the day. As per the new regulations, the deviations will be priced as per each time block clearing price. So, and that I am sure should lead to better grid management and shifting volumes from the DSM market to the exchange market. REC regulations are also getting implemented. New REC regulations also will be more market friendly. So, and from 1st of January, when this GNA is implemented, I'm sure that should give further volume growth.
So how long do you think it could take for volumes to improve, Mr. Goel? Because you have the onset of the winter season as well. You also have better availability of coal. In that context, the expectation is perhaps that volumes could fall further. That's what you mentioned in your last operational update as well. Can you tell us how long would it take before volumes, improve?
In fact, in the month of October, the prices have reduced to almost about 3.8 rupees per unit. Last year, the prices were about 8 rupees per unit. There is a significant drop in the price. It is mainly because of better availability of coal in the market now. And I see in the month of November, in the first 7-8 days, the volume have already started picking up. And the demand, as we have seen in the last 7 months, is increasing every month, almost at a rate of 6 to 7%. So we see in the winter months also the demand increasing, and we should see volume growth in these next 5-6 months.
All right,
mainly because of the better availability of coal.
And you believe,
because, if you see the coal production in the second half, the coal production is much higher than what it is in the first half.
Yes.
So,
okay, all right. Very quickly, then, if you could tell us if volumes are going to recover for FY23, will volumes be flattish in comparison to FY22, or do you want to give us a number out there? And also, what's the update on embed? That was supposed to be the big driver, right? When do you expect implementation, Mr. Goel?
Yeah, numbers for FY23, it was a difficult year, mainly because of the very challenging conditions which were prevailing in the commodity market and energy market. But in spite of that, I'm sure we should close this year with the number which we achieved last year, because last year our volume growth was almost about 37%. So we should be able to achieve the same number. As far as MBD is concerned, the discussion paper is now with CRC, and CRC is yet to issue a discussion paper, and after that they will do public consultation. So it's very difficult to say when it will get implemented.
Mr. Goel, if you can put a number on that volume, is it possible for you to put a number to that volume? Well, they're down about 10% in the first half. What would it look like in H2?
No, in the first half, the volumes were almost about only 3% down. And I'm sure by the end of the year, we should be able to make up that.
Electricity volumes on the exchange?
Yes.
Okay.
In the first half, it is 3% minus.
Okay.
And by end of the year, we should be able to achieve the number which we achieved last year.
Even it out back to F522 levels.
It is about 102 billion units.
All right, fair enough, Mr. Goel. Appreciate you joining in, and thank you very much for running us through all of that. By the way,